Hi, this is Nancy with Lock Rate Mortgage, and this is your Fast Mortgage Insight. Today's topic is credit, and I'm sure you may have many questions. What is credit good for? How do you calculate my credit score? How does my credit score affect me? And how can I improve my credit? So let's start with the basic. Credit score is a number that represents the credit worthiness of an individual. Now, how they come up with that number is using a mathematical formula to predict the repayment pattern. You probably know there's 3 credit bureaus known as Equifax, TransUnion, and Experian. Creditors report to them and they assess your repayment patterns and come up with your score. Now, for mortgage qualification purposes, lenders will use your mid score. You have 3 scores, say it's 750, 722, 735. Well, they'll use the mid score between the 3, which is 735 in this example. If you have 2 borrowers that are applying, they go off the lowest mid score of the 2 borrowers. When calculating that score, there are major components they look at. And so let's cover some of that. Credit history. The longer your history, the more data they can analyze, which makes your payment history look better. Payment history. Making your payments on time, of course, will help boost your credit score. Making more than your minimum payments will help bring down your balances and show that you're able to afford the payments, which also help. For collection accounts, lenders actually don't mind that you have some credit cards or medical bills in collections or late payments. It always helps, of course, to pay off any collection accounts, but what lenders do care about are any mortgage late. Lenders only allow one 30-day late payment in a 12-month period. They also do care if you have any outstanding judgments on your credit. Lenders will require those debts to be paid off, and they do care if you have any bankruptcies in the past. So for example, if you filed Chapter 7 and are applying for an FHA or VA loan, they require you wait at least 2 years from the date it's been discharged before you can qualify, or 4 years from the date of dismissal waiting on a conventional loan. Credit limit. Maxing out your credit limits will usually drop your score, as they see that as a sign of potential high risk. So a pointer is to keep that credit balance under 50%. Here's an example. Your credit card has a limit of $2,000. Then you want to make sure that you keep your balance under $1,000. Now keep in mind, no one really knows exactly the formula the credit bureaus use to calculate the score. So these are just some general known factors. Now, if your mid score is too low to qualify, or it's right at that borderline to get to the next tier in a better rate and cost, don't get discouraged. Talk to us. We here at Lock Rate Mortgage actually offer a rapid rescore assistance program to our clients where their credit is actually evaluated. We offer recommendations to improve the score and actually get a quick rapid rescore within 7 days to help boost you to the next level where your score needs to be. I understand everyone is looking for ways to avoid credit pulls. And so the most common question I get is, do I have to pull all 3 credit reports? I really want to avoid dropping my scores. Okay, so really the answer is yes, but not necessarily do you have to pull all 3. So you can do a soft pull. Say you're just shopping around and you want to know, what's the general market look like? In those situations, I can pull a soft pull where it just pulls 1 credit and it doesn't affect your score. But in reality, that only gives us an idea of what your debts are showing up as and what one of your credit score looks like. However, as I mentioned earlier, you should pull all 3 credit scores. And that's because to get you an accurate rate and quote on the program, you need all 3 credit scores to evaluate the mid score. And yes, maybe your score might drop 3 to 6 points worse. If you're monitoring your credit score through a third party, such as your bank or an online website like Credit Karma, these scores showing up there are not your true scores. Usually, those scores you see are inflated by 10 to 20 points in comparison to what you see on the credit bureaus for mortgage lending purposes. I usually recommend maybe when you see that, deduct 20 points from what you're seeing online. And that's probably closer to what the number is going to look like when we pull your full credit report. Now, if you have more questions, please don't be afraid to reach out to us. We're here to help answer your questions, help analyze your credit, provide some suggestions and recommendations on how to get a better score and get you into a better rate. And that was your Fast Mortgage Insight. Thanks for watching. Bye now.